What is going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over economic indicators and my thoughts on the overall market and my assumption on what the stock market will do in the future. So, hopping straight into the video, I'm going to go over these key economic indicators that the Census Bureau puts out. Some of them are quarterly, some of them are monthly. So we had some pretty important ones today. The initial jobless claim numbers and producer price index came out. So those initial jobless claims numbers came in at 375,000. Previously it was 387,000. And so that number is dropping significantly. It's expected to be 375. So we hit right on the dot for those numbers. And we also had continuous jobless claims coming in at 2.98 million, now coming in at 2.87 million. So dropping for those numbers, and then the producer price index is increasing. So, well, not increasing, it's staying up just about, flat neutral. So, excuse me for that. It was expected to decrease to 0.6% from 1%, but staying at, right around 1% area. Staying right around that 1% area for the producer price index. So hopping straight into these charts here. Let's make this a little wider. So starting off with these E-mini S&P 500 futures coming in up here, we're still staying strong on the trend here. Looking at the S&P 500, we're early into the day. It's about 12 o'clock as of right now, just about noon o'clock. So market is still veering towards the upside here for these S&P futures. Slightly grinding, staying right above the 9 tightly. A very tight trend here, and it's been lasting. So, for the entirety of this week. So, you just can see going in here, just slightly pulling back and staying right above, that 9-day moving average. So, still very strong trend for the S&P. I'm not really seeing any overbought levels or anything like that. We are up about 0.5%, 0.05%. So it's, it's just looking nice for the S&P. It's continuing to make those legs higher, So nothing to be concerned about when it comes to looking at the S&P 500, So the next topic we'll be looking at is volatility. Now, volatility matches up always with the S&P 500. This is how we tell our fear factor level. This is how we tell whether or not the market is volatile or not. And when VIX is low, fear is low. When VIX is high, fear is high. So looking at this here, we can see VIX is going back to those lower levels, and now we're about around 1558, and so that's a very low level for the VIX, which is meaning not that much fear factor in the market, which is a good indication for us. But also on the flip side of that, be ready for VIX to, recalibrate and eventually, we may see some spikes in volatility coming up soon, just because of the lack of volatility in the market as of recently. It never stays, hardly does it ever stay in these lower levels for that long before, we see a slight pop in volatility. So just be expecting that. Next thing we'll be looking at is RUT. RUT is still grinding higher as well, just doing it very slowly. So, with that being said, RUT's been staying in this channel for such a long time. Very slow mover, but it's a good money maker. These slow movers, they're not very difficult to predict their movement. Obviously this is uptrending, and I would be the 180 day is called all the way up to it. So, at this point, our indication of bearishness is if it crosses below the 180, that'd be a clear indication that this market is just a failing market, and it's getting a little bit too weak, you know, on the technical aspect of things. But as of right now, RUT is holding up above those simple moving averages. So looking nice for RUT. We could continue to make our way up to the all-time highs and potentially get ready to break out, within the next few weeks or months maybe. But, who really knows? This thing could, come to a stop. It seems to be about some resistance like right here, which could be, an area that maybe sellers step in and push this market down. But there's just things you have to keep in mind here when entering in trades. But as of right now, what I'm looking at is this 180 day to see whether or not it can hold up above here. And if it does, like I said, I could potentially see this market going back to all-time highs and testing this overhead resistance again for about the 1, 2, 3, I say fourth time, and hopefully giving it a run for its money and seeing some new gains for RUT, which we haven't for a minute. And I could expect once it does get to those higher levels, it could have enough momentum to eventually finally take over. Looking at the Qs and Nasdaq here, holding up nicely right at this 365.16-ish area. Looks like we're kind of in a channel here, bouncing right off of that 21 day as well. I think I spoke about that in the video yesterday that would happen. So as we are, coming down here, bouncing, could be expecting this to continue up and now make its way back up towards all-time highs. We still got that 9 day, which it has to get above next. And once it does that, I don't see any problem with it getting to all-time highs today. After the pre-market, it was weak, but opened up extremely strong, and now we're pushing up. So keep an eye out, looking at this here, and not that many overhead levels besides all-time highs. So not much resistance for this to fight besides the market itself. So that is for Qs. And just checking in on my good trade here. Google is now putting in some strength. Finally, we were waiting for a minute. Let's go here. Yeah, yesterday I said that, my biggest thing was I was thinking that a cup and handle formation was coming and it was going to break below, but cup and handle formation doesn't really seem to be putting in yet. We still have to be patient on it and see if it's going to happen, but it's staying above that 9 right now, which is still showing me strength no matter what. So I'm ready. I'm really just waiting for some more volume and Google to start kicking back in. And once that happens, I can see this thing just taking off. And obviously, the only other resistance point up here is at 2,800, and that's a whole number. So we'll be waiting for that. Be interesting to see for Google here. Next thing we'll look at is Amazon. Amazon was really interesting to me. I liked Amazon. I'm waiting for this thing to kind of give me more confirmation. Amazon dropped like crazy and bounced off the 180 and is bouncing again off that 180. And so looking for more volume to come in on Amazon. If it can, we can expect a gap fill. Very easy trade. May do a calendar on this, or may do a long call debit spread, or may just sell some puts. Or may I do a straddle or something like that, who knows. But I'll come up with something based on how implied volatility looks and based on how strong the move is and how convinced I am that it's going to fill this gap. So if it does, then I will let you all know what plans I tend to make on Amazon. as until then, I'm waiting for Amazon to give me a little bit more confirmation. But I do like to drop off of those highs. It was just really confusing to me why the implied volatility didn't ramp up a bit. I would expect it for that to happen, but we're looking at MACD. Want to see that crossover, and then we just want to see the market pick up steam and volume before hopping into this. So with that being said, that's the end of this video. Don't really have that much to talk about today, just because I'm not liquid yet. I'm still in trades, and so I'm kind of just here spectating, looking over everything, just really piecing everything together, staying into single market. What this channel essentially does for you all is keep you in sync with the markets. Every day showing up, going over economic indicators, going over news, seeing the headline reports, and just seeing what the overall conditions of the markets are. That's why we look at all of our indexes, and that's why we go over the economic indicators, and that's why we break these things down. If there was earnings coming up with any of my stocks or anything like that, you want to make sure those are up to date. That's just how you stay in sync. If you don't do that, you don't want to stay in sync, most likely you won't be able to find the next money making move for your portfolio. So that being said, I'm gonna leave you with this. If you like the video, subscribe, like, comment, and I'll see you on the next one.